I funded an account with $50,000 and I'm using that to generate income using options. Over the last 2 months, my average profit has been $1,035 per week. And today I want to share with you exactly what I do in this account, some of the exact trades and the strategies that I use to get these consistent levels. This isn't financial advice though. This is just what I do. Don't copy us random strangers on the internet. Do your own research and get good at managing your own money. So today I want to cover how to structure your account for income, why capital preservation must come first, the exact trades and trade types I use. I would love to know though, if you can put it in the comments, if you're looking to, or you are living off of a trading income, how much per month are you actually looking for? Because what I would love to do is build this account to the point where it actually can generate per month what most people require to live off of. And that way it'll give you a good idea of what kind of account, like value to aim for to sustain X amount of dollars per month. So let me know in the comments what you're aiming for. And I would also love to invite you into the 50K Club if you are not yet a member. This is where I share all the trades I take in this account. We have 74 members at the moment. Up until member 100, you can join us at a discounted rate of $70 per month before that price increases once more. So we do lots of fun things in here, like of course, close out trades in profit. That's always fun. But also I like to share the why behind the what, right? So this week, a couple of the comments, thank you for taking the time to walk through your decision-making process instead of just showing the outcome. Seeing the math behind your choices, especially how you weighed opportunity cost and evaluated whether a trade was worth staying in, was incredibly valuable. Brent loved the session on fear and greed. He said, this is one that every trader needs to keep watching over and over again. Yes, I agree. Fear and greed drive a lot of our results. And Robert loved that we were talking about opportunity cost, said that many people don't realize how powerful of a thing that is or what it is. And especially with a small account, I can absolutely say that opportunity cost is something that we really need to be mindful of. So links in the description to come and join us. With that said though, let's get started. So structuring your account. One rule that I do not follow in this account is the 10% per ticker or per stock rule. Now, on an account valued at $50,000, this would have me trading stocks that are only worth up to $50 per share. To me, that is risky. Why? Because of the types of stocks that are valued at this amount. They're risky stocks. So yes, I've spread my risk, but I haven't spread my risk over low risk stocks. I've had to spread my risk over high risk stocks. And to me, that doesn't make a lot of sense. So yes, it's probably controversial, but I don't follow this rule. What I do instead is I change the way I approach a trade. So I trade already knowing what my exit strategy is and the loss limit I'm prepared to accept. And because I do that, it allows for me to trade better stocks. So personally, I'd prefer an account with 2 to 3 high quality upward trending stocks that I know my way out of. Whether it be that I'm rolling or I'm cutting my loss, I would much rather that than an account full of speculative and or cheap stocks that just continue to get assigned, they continue to drop further, and they tie up a lot of my capital waiting for recovery. An example of this is at the moment, I have a $17,500 position in Soxal. A lot of people think I'm crazy, but I think for my account, the way I trade, it is far less risky than spreading that money over 3 $50, $60 stocks. Now, capital preservation. Know and calculate your risk first, right? You can't grow a small account if half of it's assigned stock positions that you're waiting for recovery or cash secured puts that you just continue to roll out for months on end to try to avoid assignment. You need your capital in constant rotation. So know your risk and what you're prepared to lose before you enter the trade. And don't be afraid of the loss. A small loss today prevents a large loss later. And I don't know about you, but the amount of times that I've been caught out in a position where I'm like, oh, we're down by thousands. I should have just taken that $500 loss when it first appeared, right? I'm much better at taking a loss now than I used to be. I don't let it get large. Now let's have a look at the kinds of trades because sold puts alone won't get these kinds of high returns. We need to add bought calls, sold calls, but sold calls on stock positions. I'm not a fan of sold calls on your bought calls, poor man's covered call. And I like sold calls because they give us high premiums and capital gains. Credit spreads, so we can use small amounts of capital for a higher percentage return. And what I like to call downside protection profit. This is actually one of my favorite trades to place. So let me bring you into my trading tracker and into the charts to show you some of these strategies and how they play out. So I'm not going to go over all the cash secured puts and the credit spreads because they're, they kind of speak for themselves. The leaps though, I want to show you this leaps position that I had on APH in May because it's an example of how you can use relatively small capital. I was in this for $3,900 and I received profit of close to 50%, $1,680 profit, and I held this trade for only 13 days. And it's the when I entered that makes all the difference. So let me show you the chart. It was, what's my date? 5/16 that I entered. 5/16. So actually that would have been the Friday of 5/15 because I live in the future, remember? So it was through here that I entered. And the reason for that is APH was the only stock in this sector to have not had a run. So I was looking at the charts and I was like, we're looking pretty low. I was looking at the stochastic RSI, we'd started to turn even more powerfully. On the weekly chart, we'd started to turn on the stochastic and we were bouncing off the 50 EMA. Now to me, this is a perfect entry for a leaps opportunity. Now remember when I say I have my goals in mind. So I had my take profit set, I had my loss, I was prepared to take a loss. That's what this line here was. If we dropped below here, then I was going to cut my loss and be out of it. My take profit, I thought, you know what, if we can get back to these high levels, that's enough for me. So I ended up exiting this trade on the 29th of May, this red doji day up here, because I had made most of my money in it. Right? I only wanted this move. Sure, I could have stayed in it and potentially I could have doubled my returns yet again. This could have been a 100% return. But on a small account, I want to bank my profits because if this move back down reversed all of the profits that I had, I'd have been pretty annoyed. So I'm very happy that I took my profits there. Now, the next trade that I want to show you are both of these entries on Credo. This is my downward profit that I talk about. So what this trade started as was a put credit spread on 512. Let me show you this trade on the chart because this is one that I love to do. So 512 was through here. So I entered, actually it would have been trading day 511. I entered thinking, you know what? I do like this breakout. It might be a fake out though. I do like Credo. I love where the company goes, but I would like a little bit of downward protection in case this is a fake out. And what do you know? It was a fake out. So what happened is I was able to profit from all of this downward move. Rather than going, oh no, I'm going into the negatives, I was like, yeah, there's some money to be made here. So ultimately what happened was the put that I had bought was worth a lot. I was able to sell that again and I sold that for a profit of $1,048. Now that then left me with an open cash secured put. So what did I do with that? I rolled it down a little bit. I rolled it out, collected more credit, and then as the stock started to rise, So I did all of that on this day here, the 18th of May. And then as the stock started to rise, I was able to just continuously roll up my sold put strike to collect even more profit before it eventually expired worthless. Another $1,098. So that was a total of over $2,100 from one trade purely because I protected the downside. Now, I tried to do that again up here, expecting, well, not necessarily expecting, because my expectation is that we're always going to go up, but planning for this potential move. But instead, my put credit spread exited in profit because we got this jump up here. And then I did the same on GLW. I had the strategy right, but just the timing a little bit wrong. So I entered a put credit spread on GLW, got the upward move, got out of that spread in profit, but what I was waiting for was this downwards move. So I just got my dates a little bit wrong for being able to actually bank on this downward move, because this would have been a great move to capture some of that. But the trade still exited in profit. That's these guys down here. I cannot be sad at profit, right? Both of these, I was in this one for 3 days for a 10% return on investment. I was in this one for 4 days for a 6% return on investment. And look at these annualized returns. So as long as our money is making money, that's all that we can ask for. And then the last trade that I'll share with you is a stock position. So I currently have an open stock position on ARTI, opened that yesterday. I got in for $70.71 per share. I know where my stop loss is. I've planned for the loss that I will take if this goes against me. And I have my take profit already set in place. So my take profit is set at $74. We almost got there today. We just missed. So if we have another quick move up tomorrow, that should trigger my exit, and that'll bank me another $329 in profit. But the key is I also know the downside risk. So I've got $7,000 in this trade. I'm not just going to sit on my hands if the trade goes against me and hope and pray that it comes back. I will take my loss. I will redeploy that capital. So at the moment, if nothing else happens in July and I just let all these trades that I have run to expiry, then I've still got another $2,500 worth of profit to collect. And if I do that, down here, my total profit for the month of July will be just over $2,500 at just over 5% return. And that's my goal. 5% for the month is what I'm aiming for. I do this at the moment without margin on the account. I want to talk to you about that in a second. But I just want to show that you don't need a lot of trades. You just need the right trades at the right time. So of course, we're only at the 9th of July, so we still have plenty of time in the month left. So no doubt there will be more trades that I make to, of course, generate even more than this $2,500 that's outstanding. But they're the trades that I have there at the moment. Brings me to my final question. What about margin? So using margin can add another 50+% to your profits. And I say safely, as long as you're using it in a way that works. So my question is, do you want to know how to safely use margin on a smaller account? And would you like to see me use margin on this account? Because what my plan for this account has been up until now is to just use the same 5,000 over and over again, to not even compound the profits that I'm using. So I'm not even, the profits that I've made, I'm not even like using those profits to make more profits. I am taking them and investing them. But I would love to know, would you prefer to see me use margin and reinvest profits to show how you can grow an account, or would you prefer to just let me keep it at 50,000 and just show you that part over and over again? Let me know in the comments. What do you think? Keep it at 50,000 or potentially do some work around using margin, because margin I use on other accounts. I love using margin, But when I was first looking into margin, I found it really hard to find like videos on how do you even do it properly and safely and what's the strategy around it. So I have developed some different ways that I like to play with margin. So yeah, let me know if you would like to see how I do that. Otherwise, I hope you've had a wonderful week trading. I hope that you were able to close out some trades in profit. If you want to come join the 50K Club, the link is in the description. And of course, if you want to learn all about margin or anything else, leave some comments below. And I will create some videos around what you're looking for content on.